Hey guys, this is Chad with TrustBooks. We've got about another 50 or 60 people or so that are joining. We're a minute before we're supposed to start. So if you're already here, thank you for being early. Just hang tight. We're going to give everyone an extra minute for time differences, and then we'll get this party started. Thank you. Hey guys, it's 11 o'clock. We're going to give everyone another minute or so to get connected, and then we're going to get started. Okay guys, it's 11:01. We're going to go ahead and get cranking. Thank you everyone to joining. Tom, I'm just going to do a quick sound check and make sure you can hear me okay.
Yep, I got you, Chad.
Okay, great. Welcome everybody to our webinar. If you're just joining, we'll take the first couple minutes to do intros, and then we'll be able to get cranking. I'm Chad. I'm one of the co-founders of TrustBooks. Tom, my partner, is on the line. He's our other founder. He's going to be doing the actual webinar today, and I will be leading the technical part behind the scenes. So let's get some of the housekeeping out of the way. Everyone is joined via GoToMyWebinar. So you should have a panel on the right side of your screen. And in there, there'll be a section called Questions and Chat. You can actually go right into the question section and type in a question. I'll be typing back and responding to those. And then at the end of each section, we'll be pausing and asking questions of Tom so that he can answer those directly. And then if you have any technical difficulties, you can either pose it as a question or just chat to me directly. One question that we always get is, will the slides be made available? They will. We'll send out a PDF of the slides to everyone after the show, so everyone will have that for the records. And feel free to ask us any questions as you go along. Today we're going to be working on the quarterly review and three-way reconciliation for North Carolina. And we're going to be talking about how to do it manually and then also through our product, TrustBooks. So Tom, if you want, we can go ahead and kick things off.
Great. Thanks, Chad. I'm going to go right into a little bit more of the introduction. So you got Chad there on the left. He's the Rico Suave looking guy with maybe that tech hipster look. And I'm the accountant. I'm the blue button up glasses, pocket protector, CPA there on the right. We're the two guys behind TrustBooks. We complement each other really well. Chad has the approach to do everything simple and easy, and what does it look like from a non-accountant perspective? And I've got the CPA mentality of dotting the I's, crossing the T's, and making sure it's compliant with state bars. So that's us. We started TrustBooks a few years ago. We saw a real gap in the marketplace for law firms that were struggling with how to manage their trust account. And we'll dive into a lot of the how-tos, and we're really focusing today on the three-way reconciliation and the quarterly review. the reason that we're kind of taking those two pieces out of all of the trust rules is because those are the two items that are the two requirements that we see trip up most law firms. And so we wanted to really spend a focused webinar on just those two activities and how to master those two activities. So that's what we're going to dive into today, and that's where we're really going to focus on is those two items. So I'm going to jump in. First, if you've seen a presentation from us, good chance that you've seen us start with some statistics. And we want to do this really to highlight why TrustBooks exist, why webinars like this are important, and what the State Bar is seeing and what the State Bar cares about. And so we've got two stats up there. North Carolina is one of these unique states where a proactive random audit is performed. So lucky you in the audience today, you're in North Carolina, which means that you're subject to the random audit process. And so every quarter, the State Bar goes out, they select 2 judicial districts, and within those 2 judicial districts, they audit roughly 60 to 70 trust accounts. And so from those audits, they're able to pull out a lot of helpful findings, helpful in terms of, what are tripping up attorneys and law firms, what are they out of compliance with? And so I've got 71% here on the left, and that's where 71% of law firms audited during the Q2 2017 random audit period failed to do a quarterly review. So almost 3/4 failed to do a quarterly review. The quarterly review is fairly new, so maybe not, well, it's still surprising because by Q2 2017, it had been in full effect. So it went into effect in June 2016. So it's almost a year later, and almost 3/4 failed to be in compliance with the quarterly review. And then the other stat is the 3-way reconciliation. This is a little bit older. This is Q3 2015, where 47% failed to do a 3-way reconciliation. So that's almost 1 out of 2 people, law firms, failed to do this 3-way reconciliation. The numbers got a little bit better in Q2 2017. That 3-way reconciliation, I think it dropped to 34%. So about 1 out of every 3 were still failing to do a 3-way reconciliation. And so both of these are quarterly requirements. And so we'll dive into what does that mean? What does that look like on the quarterly basis? I start with this just to kind of grab your attention. But at the end of the day, I don't want to scare you that these things are impossible to master. Doing the 3-way reconciliation, doing the quarterly review, that they really shouldn't be as scary and overwhelming as a lot of attorneys and legal staff think they are. It's just, and again, I'm biased here, but it's using the right tools, right? It's like trying to play tennis with a golf club. You try to play tennis with a golf club, you're going to fail. You play it with a tennis racket, it can be a pretty easy and productive sport. And that's what we built TrustBooks for, and that's what we'll highlight at the end of this webinar. But I just wanted to start by giving you that peace of mind, that assurance that this doesn't have to be too challenging. It doesn't have to be an overwhelming. It doesn't have to be scary.
Hey, Tom, let me ask you a question before you move on. And then if we could, I had one person say in the chat that they couldn't hear us. So if I could just have 1 or 2 people, if you are able to hear us, just hit me with a chat or a question saying, hey, we're good. But my question for you, Tom, is why do you think those numbers are so bad? I mean, people aren't setting out to do this incorrectly. So what do you think causes the numbers to be so alarming?
Sure. A couple things, and this is from my experience, and I give a little bit more background. So CPA, I had a CPA practice starting in 2010. In 2015, Chad and I started doing TrustBooks. But with my CPA practice starting in 2010, I worked, almost exclusively with law firms. So law firms and the legal market has been my niche since 2010, and very specifically in North Carolina. And so I've had kind of this firsthand view of what is tripping attorneys up and law firms, and why they're out of compliance. And now with TrustBooks, we get a lot of folks that come to us and they're just, their stuff isn't in a great spot before they come over to TrustBooks. And here's the few things that I've noticed that keep recurring. One, it's just kind of this lack of knowledge. So the trust handbook, it's 100 pages. It can be, it goes fairly in depth. It can be overwhelming. It's a piece of managing a law firm that, most attorneys, it's like the last thing to do on their to-do list. I think taxes and trust accounting can be grouped into that same category. And so you've got this requirement, but it's so kind of the last thing you want to do that it gets very easily overlooked, and it doesn't get the right amount of time to go in and understand what are the handful of things that I need to be doing. Two, a lot of this is set up by the existing software. So, and I'll give you an example of my CPA practice. I was using QuickBooks and I was using Excel. And we had to be very diligent within QuickBooks and within Excel to try and manipulate those software to get it to work for a trust account. And we're a team of accountants. We're CPAs and accountants. This is our bread and butter. But we still had to be very diligent about manipulating that software. And so you can go into something like a QuickBooks and do a reconciliation, and you might think, okay, I've done a reconciliation, I'm good. But that actually doesn't meet the three-way reconciliation requirement. So it takes in a lot of extra steps that you need to do if you're using a product like QuickBooks. And I think there's just been this disconnect between that knowledge of knowing, exactly what the reconciliation looks like in, say, a QuickBooks, and then understanding what the three-way reconciliation requirement is and knowing how to bridge that gap. And so it's not automatic. And so there's a lot of extra legwork that needs to go into it. And then it's just the setup. How do you set something up that's not designed for trust accounting? You have to be very in tune with the rules and with the software product if it's not built for trust accounting. And so those all compound on each other. And that's what I've seen. And in small law firms, you've got so much on your plate that it's very easy to kind of overlook and not dive in like you should, because it's accounting. You went to law school to be a lawyer. You didn't go to go to be an accountant.
Okay, that makes sense. Thank you.
Yep. And Chad, I just saw that somebody said they lost hearing me. Is that across the board, or is that just maybe a one-off?
No, I think we're good.
Okay, perfect. All right. So
I think so. I can hear you.
Okay. Perfect. So that was a great kind of understanding of the challenges that are out there and why there's this disconnect. So now I'll jump into talking about requirements, kind of get back onto what are the requirements, what are the new requirements, and how do they fit into the three-way reconciliation and the quarterly review. So the existing requirement that's always been in place on a quarterly basis is this reconciliation process where you have to reconcile your trust ledger to your bank statement to the sum of your client ledgers. So that's a three-way reconciliation right there. That requirement has been around, so that's not new. In June 2016, they added some additional rules, and that's what's here on the slide. One is they want you to do more of a review of the statement of costs and receipts. We get this question all the time. The statement of costs and receipts, that's your trust ledger. So it's synonymous with your trust ledger. There's some software out there that calls it a costs and receipts. So that, I think they piggybacked off of that terminology. So they want you to review the statement of costs and receipts, the client ledger, cancel checks. Really what they want you to do is review it for fraud or potential embezzlement. So there's this big focus with the new rules on how do you prevent or detect fraud and embezzlement. That is such a important piece of keeping your trust account in good standing. You don't want to violate that sense of responsibility that the legal profession has with the public. And so any fraud, embezzlement, they want you to be more proactive and finding it, deterring it, so that it's not an issue. The next thing is the sample of 3 representative transactions. That's your quarterly review. That's what we're going to dive into. So that is a new requirement. We'll talk about what that looks like. We'll actually walk through an example. And then the final new requirement is to sign and date. So you have to sign and date. There's still a monthly requirement, so I don't want to brush over. We're talking a lot about the quarterly reviews and reconciliations. There is still a monthly reconciliation requirement that you reconcile your trust ledger to your bank statement. My recommendation is you do the 3-way reconciliation each quarter, or each month, I'm sorry, that you just build it in part of your process. Again, we'll show you TrustBooks. We do it automatic, but even if you're not using TrustBooks, a best practice is to do a 3-way reconciliation each month. All right. I get into the why. So why are things important? Why do you do this? I've kind of broken it down into 4 bullet points. So why do we do reconciliations? We do it because we want to compare our data, our internal data, to something that's better than our internal data. That something that's better is bank information, a bank statement. So in the accounting and auditing world, there's this hierarchy of source data. Third party, information coming from a third party that's a reputable third party, like a bank, is at the very top of that list. Something that is internally generated, like your accounting information, is at the bottom of that list. So by doing a reconciliation, at least on a monthly or quarterly basis, you're comparing your internal data to a bank statement to make sure whatever you've got captured internally matches that bank statement, because that bank statement is a higher value data than your internal records. Next one is just on a periodic basis, you want to make sure that your records are complete and accurate. Doing the reconciliation helps give you that comfort level that your records are complete and accurate. And that kind of goes into the 3rd bullet point, that mistakes do happen. And so if you're comparing it and reconciling it, you can catch those mistakes and you can fix them in a timely basis. I can tell you from experience, it is much, much easier to try and reconcile a very specific period in a vacuum than trying to do a long period of time. For example, if I'm looking at 1 month's worth of data, I can zero in. If there's a mistake, I can find it fairly easily by looking at just 1 month's worth of data. If I'm trying to look at an entire 6 months worth of data, that makes it really, really hard. That's a lot of data to look at. If you find a mistake, you don't know where to search. So that's why doing this monthly or minimum quarterly, my recommendation is monthly, really helps on the reconciliation side. And then this final piece, the detection of fraud or mismanagement. You want that fraud control in there, and so doing the reconciliation helps you accomplish that. In the Trust Handbook, we've got 7 key concepts. So one of my other CLE presentations, and this is not a CLE presentation, but one of my presentations is kind of walking through the Trust Handbook and really understanding the basics of the Trust Handbook. There are 7 key concepts of managing your trust account, and I preach this, that if you understand these 7 key concepts, you'll be able to handle 80 to 90% of the trust scenarios you come across. Doing the 3-way reconciliation, and this is why state bars really hone in on completing this 3-way reconciliation. By doing this, you're giving this comfort level that you're hitting on about 5 of these key concepts. And the ones that you're hitting on is the segregation. I've got it spelled out here, and I'll walk you through why. So in a 3-way reconciliation, you've got the ability to, at the end, look at an entire client list with the available balance as of a quarter end date. So part of the three-way reconciliation, I'll repeat that, is to look at your client list, the available balances as of a quarter end date. If you are able to generate that client list, it's basically showing you a few things here. One, it's segregation of client funds. That segregation of client funds, those are your client ledgers. So every activity, every transaction that goes in and out of the trust account has to be associated to a client. And so it's this concept of segregation of client funds. So every transaction has to be associated to a client, which means that you have to be able to run client ledgers. You have to know what you've got in the trust account on a client by client basis. And so at quarter end, if the state bar comes in and sees this three-way reconciliation, and you've got your client list, you've got the available balance, that gives them a lot of assurance, a lot of peace of mind that, hey, you're running client ledgers. If you weren't running client ledgers, then you wouldn't be able to pull this list together. The second thing is, by showing that client list with balances, you can really quickly see if any of those balances are in the negative. So you can't overspend on a specific client. That's going to be bringing a client ledger into the negative. You can't do it. Showing the client list with available balances will highlight if any of them are in the negative. Final client balance should always be zero. Again, client list, balances, if there's anything other than zero and it's going on for months and months and years, it will show up on that report, and it's an easy way to see if the balance goes to zero or not. And then final, this audit trail, three-way reconciliations. It's a great piece of auditing trail by reconciling and kind of putting that into the mix of good bookkeeping, good record keeping.
Hey, Tom, I have a couple questions for you.
Sure.
Not from users, but just in general. We've had quite a few North Carolina attorneys come to us after being audited and looking to have a better way to do it. Without giving out too much detail, do you recall which one of the 7 key concepts are most often the issue? Like when people come to us and they go, man, Tom, I really need help fixing this. I'm hoping TrustBooks can do it. Which one of these tends to be the problem child?
Yeah, good question. So we see the negative balance quite a bit, and this is where I think I've got the stat right, where it was 10% of those audited last in Q2 2017 random audit were out of compliance with bringing a client balance into the below zero or into the negative. So that's a big one, and it's because, again, it's real easy to overspend on a client balance if you don't have preventative controls or proactive controls in place. And so if you're handwriting a check, or if you're using QuickBooks, you can cut a check for anything you want. And if you don't have a good system in place, it's real easy to overspend. And so that's been a big one. And that's one where the state bar really comes down hard on. And again, the other ones are this three-way reconciliation. The three-way reconciliation is a piece of maintaining a good trust account that gets a lot of confusion and a lot of headache and groans about how do I do it? Where do I start? The software I'm using, just what is this three-way reconciliation? So that's a big one that we've seen. And again, that's kind of supported by the stats too, where so many, I think 47% in 2015 failed to do that. The last one is also the client ledgers. You'd be shocked, or maybe not, but the client ledgers give people a lot of headache here, where they think they're using software, they think that they're doing the reconciliations, they're tracking everything at a trust ledger level, so at a high level, and they're not, they're not doing anything incorrect, other than, at least in their minds, they're not doing anything incorrect, because what they're doing is they are recording all the activity in and out of the trust account in their accounting software. Well, their accounting software doesn't add that other piece where you've got to apply it and assign it to a specific client. So they're kind of lost and operating in this no man's land where, yes, at a 40,000 foot view, all the activity is going in and out of the trust account and they're recording it and able to reconcile at a high level, but they're lost when it comes to that more detailed level of being able to segregate all those funds and assign it to a specific client. So,
Okay,
Chad, have you seen
that's
anything?
helpful.
Yeah.
Yeah, you know, the thing that I've seen the most is people struggling to quickly add together their client balances. So, you know, they have some type of ledgers, they're not always up to date, but the through a reconciliation being the bank balance, your trust records, and your client records, they're often missing one of those pieces. I often see them balancing the bank statement to their general trust balance to make sure they match up, but they don't often add up all the individual client ledgers and do that three-way component. So I see that. And then Tom, Stephanie asked a good question. She said, am I correct that TrustBooks does not allow you to over disperse on a client ledger and thus prevents a negative balance? I'll go ahead and answer this one. That's right, Stephanie. The cool thing about TrustBooks is we're accounting, but we're only legal accounting, and we're only for trust accounting. So we're very niched in, and that allows us to put workflows in place that kind of protect you from yourself. You couldn't do this with general accounting software because you need the ability to take a balance into the negative, but in trust accounting, it's a huge no-no. So we actually prevent you from doing that. We've got maybe 5 or 6 custom workflows that we've put in for the state of North Carolina. It's different for every state, but there's about 5 or 6 for North Carolina to help protect you from yourself or a data entry error.
Yep.
And Tom, back to you.
Perfect. Yep. So I'm going to segue now into actually the specific rule. So we're going to start by looking at the quarterly review. So I want to show you what the quarterly review form looks like and talk a little bit about that. And then we're actually going to go into TrustBooks and we're going to complete both a three-way reconciliation and a quarterly review. So I want to give you that real world hands-on experience of, okay, we've talked about it in theory and in concept. How do I actually do it? What does that real world example and scenario look like? So the quarterly review, here's the form from the State Bar's website, and I'll pull it up here. Let's see. So I'm going to actually pull up the State Bar's website. If I go under lawyers and I click on the trust accounting, so on the State Bar's website under additional resources, you've got this quarterly review report, and that's what we're looking at right here. This is the quarterly review report. And so you're supposed to look at a minimum of 3 transactions, and with those 3 transactions, you want to tie it in to things like the cleared checks. You want to tie it into your accounting data and client ledgers and trust ledgers, and just make sure, were those transactions and disbursements, were they properly recorded? Were they properly made? And so we'll walk through what this looks like. A transaction, first of all, transaction number 1, this is a question we get quite a bit, is what makes up a transaction? And it's one that I struggled with at the very beginning of this, and I had to get guidance from Peter Bullock at the State Bar. So a transaction can actually be made up of multiple disbursements. It's really an event that triggers disbursements to happen. The easiest examples for me to kind of get my arms around, I'll do 2. One is, let's say, a personal injury attorney, where they've got a settlement, insurance settlement. The insurance company pays out, let's say, a $10,000 check. The $10,000 check goes to the lawyer, goes into the trust account, and subsequent to that deposit going in, there's a series of disbursements that get triggered. Let's say the lawyer gets paid for their portion of fees. Let's say the client gets paid for their portion of disbursement. And let's say there's some liens that need to get paid off. So we've got 3 different disbursements that all got triggered from that one insurance settlement. All 3 of those disbursements would be selected under one transaction. Another example that's kind of easy to get your arms around would be in real estate. And a lot of the trust rules you'll see are kind of based off of real estate. That's where there's a lot more volume of trust activity, and the dollar amounts are typically higher. And so you'll see that some of the trust rules kind of have this real estate underlying real estate angle to them. So real estate transaction, let's say I go to purchase a house, the house transaction, the buying and selling of a house, all the disbursements that would be related to that single purchase or sale of a house would be considered one transaction. So that is, I think, important to highlight. And then as you go through, let's say we're going to go with that personal injury attorney. They've got the 3 disbursements. I would select the date range of the disbursements. It's going to be the quarter. Client and matter. Does the client ledger show a negative? So this is important. So you've got to be able to show a client ledger. Hopefully no. If yes, then you need to attach an explanation. And then you're just going to walk through. This is a checklist. So can you tie those disbursements into the statement of costs and receipts? Again, I talked earlier, statement of costs and receipts, that's your trust ledger. Can you tie those disbursements into the client ledger? Have you reviewed the canceled checks? And again, with all these items, you need to be able to attach it to this report. So you've actually got to be able to either have a printed copy, somehow you've got to be able to kind of wrap this all up in a nice pretty bow and complete it here. Did the transaction involve multiple disbursements? In this scenario, yes, it involved 3. Any disbursements outstanding? I would look at my reconciliation at the quarter end and see if any of those are still outstanding. I'm not real sure what the corrective action could be. A lot of times, it just takes a week or 2 for a check to clear, and if you wrote it at the end of the month, that's a pretty normal and reasonable expectation. And then were any disbursements improperly made? No. This is were any disbursements improperly made. That's really, theft, fraud, embezzlement. They want you to look for that. So that's in a microscope how you would do one transaction. Now the key is that you have to do it for 3. And then at the end you sign and date this. So that's the 40,000 foot view for doing a transaction in the quarterly review. This is how it could look if you manually fill it out. And so now I'm going to segue this into actually looking at TrustBooks and completing
Hey, Tom,
this.
before you do, can we pause for a few minutes?
Yeah, absolutely.
Okay. So a couple of questions. I'll answer the first one, and then I'll toss the second one over to you, and then I have a question as well for the group. William asked, is it possible to maintain a small balance, $100 or so, to cover any charges by the bank? And the answer to that one is yes. You can carry a small balance to cover any type of fees or anything that would accidentally happen to prevent you from going into the negative. However, I would definitely say get with your bank, because if your account is set up properly as a trust account or an IOLTA account, there shouldn't be any fees coming out. If they are, they would be notated on your statement, and you should see that as soon as like interest comes in, it'd be pulled out, but there shouldn't be the fees. But it is permissible to have it in there. The way you track that in our product is we would just create an account for that float and then just keep it as a running balance so that you would know what you had and everything was still balanced. And then Tom, a question for you. So statement of cost and receipts and client ledger are one and the same?
No, they are not one and the same. So a statement of costs and receipts is what I would describe as the 40,000 foot view. This is showing all activity in and out of the trust account that kind of mirrors all the activity in and out of a bank account. A client ledger is going to take that 40,000 foot view and segregate it into individual clients. And so as a whole, yes, there's going to be the same transactions kind of in both groupings, but in the client ledgers, it's going to be segregated out on a client by client basis so that you can run and show just that activity for that specific client. So I'll show you how that is highlighted here. In TrustBooks, this is our dashboard, but here's our trust account. So we've got one trust bank account. This balance right here would be our statement of costs and receipts or trust ledger. And if I click on this, I can see here's all the activity that goes in and out at a high level. I can see the client, but it's not segregated out by client. So that's at a high level, the statement of costs and receipts or the trust ledger. Now, the client ledgers, if I were to go over here to the view matter list, this is going to segregate out that total balance on a client by client basis. So you can see I've got, let's say, Amanda Thomas, and I can see here's just the activity for this one specific client. So that's the difference between the statement of costs or receipts or trust ledger and a client ledger.
Okay, thank you. And then a question from John: Do we have to have images of the canceled checks with our report, or is it sufficient if we see it online and you can attest to the report? And then Tom, I would add, this isn't John's question, but just a part 2 to this, because this whole process is such a whooping. After you answered John's question, could you just kind of explain, if someone is doing it by paper, how this whole process would look? Like, they'd have a folder, what would be in it? Like, really go to town on the details on this one so everyone can understand. In TrustBooks, our customers have a completely paperless process, so the digital signatures, the images is all online, but it's a bit different if you're managing the paper. So maybe chat through both of those for us.
Yeah, so John, to answer your question, it is not sufficient just to say that you looked at the images and not to attach at least some form of that image or cancel check to this report. It spells out right here, the lawyer to review the following and attach to report. So, and you've got to keep this for a period of 6 years. So, and that's why it's important. It's this period of time that you're supposed to keep these quarterly review reports. I wouldn't think, and maybe this is me assuming, but I wouldn't think that the State Bar would rely on something 5 years down the road. They'd want an actual printed copy that they can go and rely and show that this was actually completed. And so that's where they're going to stick to actually wanting to see the cancel check or an image of the check attached to this quarterly review. So that's the specifics there. And you're right, Chad, this can get very cumbersome. So all these things you have to attach to the report, the statement of costs and receipts, the client ledgers, the canceled checks, that can be very cumbersome. So at the end of the day, you're going to be stuck with this, pretty massive report. You're going to have 6 years worth of it. It's going to be, you do have to sign and date it. So it can be a very detailed process, and it's a lot of the organizational and document type management that you have to do to keep this and make sure you're in compliance with the State Bar.
So Tom, with that, so you have a folder and you're looking to have paper copies. Explain what would be in that folder.
Yeah, so what's going to be in that folder is you're going to have this summary report. That's going to show you everything that you did. It's going to outline, and document everything that you did. And then attached to that summary report, you're going to have the trust ledger or the statement of costs and receipts. So depending on what system you've got in place, that can either be, going into QuickBooks and printing out a trust ledger out of QuickBooks, or if you've got it manually, I guess it's going to a Xerox machine and making Xerox copies, or if you've got it in Excel, then it's trying to print out that Excel file. So that's step one. You're going to attach that. Then for each transaction, you're going to attach the client ledgers. So again, same process, however you've got the client ledgers maintained, you're going to have to print out a copy and keep it on this report, and then the canceled checks and images. So each one of those items will literally get put behind this report and attached to this report. So it's going to be, it's going to be a process for sure.
Okay, gotcha. And then this next question from Dawn, you can answer as you go into your next part. The question was, with TrustBooks, is there a way to download the Trust Ledger in PDF form for the transaction review? So if you could just be sure to point that out as you're in there.
Sure. Perfect question. Okay, great. Chad, any other questions?
Nope, not at this time.
Okay. So I'm going to pull up. So first thing that I want to do is the three-way reconciliation. I want to start with the three-way reconciliation because I think that sort of builds into the quarterly review. And so what we've got here in TrustBooks, just for anybody not familiar, this is our dashboard. The top row here is where you're gonna go in and manage the day-to-day activity for your trust account. So I showed this earlier, but here's all of our clients. Here's the available balance. So again, very specific to trust accounting, and hopefully you see here that we've stripped away any noise, any excess noise that is not needed for trust accounting. It's not inside of TrustBooks. And we've also really simplified what we do here with deposits, payments. We've mapped out and mirrored the workflow that you find in your law firm. So no accounting jargon. It's real simple, easy to use. So month end comes around. I'm going to go into reconciliations and hit perform reconciliation. Let me just strip that away there. And I'm going to do a couple things first. One, I'm going to pull open my bank statement. And so I've actually created a template bank statement here because I wanted to highlight a couple things. First, I'm going to go in here and I've got this wrong. These should all be, the dates on these should be May 31st, 2015 or 2018. So I apologize on that. But I'm going to go in and I'm going to pull two things. I'm going to pull the date and I'm going to pull the ending balance.
So you're saying don't wait 40 months to do your reconciliation.
That is accurate. That was trying to do this quickly and put together a bank template. That is not always the easiest thing. So I'm going to do two things. Ending date per the bank statement, ending balance per the bank statement. That's how you start a reconciliation. So at the end of the day, what I'm trying to do is make sure that my internal records match up with this ending balance per the bank statement. I talked about this earlier. This is our higher level of source data. This is coming from a third party. This is what we want our internal records to match. So that's step number one. Now you can see here, I've got all these transactions in my trust account for the month of May, and then some of the checks and payments were older than May and the month of May. So what you're seeing is these older ones. These were unclear checks that just keep getting rolled forward month to month until they actually show up on a bank statement. So this check I wrote in February, it still hasn't cleared the bank, so it just gets rolled forward month to month until it actually shows up on the bank statement. So my next step, I'm going to pull this bank statement back over, is I'm going to start with the deposits and credits first. So I'm literally looking at my bank statement, and I'm going to go item by item and make sure that each one of these deposits match up with what I've got recorded in TrustBooks. And so that's how you do the reconciliation. So I'm just going to start doing that now. I can go through and make sure I'm clearing and checking off that all the deposits that show up on my bank statement match what I've got in TrustBooks or my accounting system. Okay, that's step number one. Step number two is I'm going to do the same process for the checks and disbursements. So I've got 6 checks that cleared during the month. I'm going to go do that same process. I'm going to match these checks that show up on my bank statement. I'm going from my bank statement to TrustBooks. So I'll go do that now. So I've got this check, this check, this check, this check, this check, this check. So those are my 6 checks that cleared during the month. These other checks that did not show up on my bank statement, but I've written in prior months or the current period, I just leave these as unchecked. These are going to be our uncleared transactions. This is one of the important pieces to understand and get your arms around with doing a reconciliation. So you can write checks and make disbursements. If they have yet to clear the bank, then you just leave them as uncleared items, and they're going to be adjusted to your ending balance per the bank statement up here. This is why we do the reconciliation. So now I'm going to scroll down. If I've done this correctly, matched up everything that showed up on my bank statement to what's recorded here in TrustBooks, then I should get down to my reconciliation summary and my cleared balance. This is just a simple formula. This is showing my beginning bank balance statement. And again, you can match this to what was on your bank statement. And then it's going to subtract all your cleared checks and payments, and it's going to add all your cleared deposits to get to your cleared balance in TrustBooks. This cleared balance must match your ending balance per the bank statement. It does, great. So we're done. This is how you do a reconciliation. So this is at a high level how you do a reconciliation. And just know reconciliations are black and white. It's either your cleared balance either matches your ending bank balance or it doesn't. And if it doesn't, then you need to go in and fix something before you can reconcile. I'm going to hit the save and reconcile button. So we've just completed it here. Now I'm going to go look at that three-way reconciliation. I'll highlight this for you. So we just did the May 31st one. I'm going to open up the three-way reconciliation. And here's what it's showing me. So this is what we talked about. I've got bank balance. I've got outstanding checks, payments to get to adjusted bank balance. That adjusted bank balance must match the sum of my client ledgers and my trust ledger. So these are the three components we're reconciling together. I didn't do this yet, but I've got the ability to sign off on this too. So we could sign off on this in TrustBooks and it's going to show up and print on our three-way reconciliation. So that's page one, the summary page. Page two is going to show me the detail of our outstanding checks and payments. That 2730, if I go back up, this is going to be the adjusting item to our bank balance. And then if I scroll to page three, this is the important piece. And this is where it's so critical that you've got this component mapped into your three-way reconciliation. This is showing me all of my clients, the balance on a client-by-client basis to get to the sum of those client balances. And so this is what your state bar, this is what the North Carolina bar is going to want to see. They want you to show, here are all my clients, here's the available balance on a client-by-client basis. The reason why is it does two things that I talked about earlier. One, it proves that I'm maintaining client ledgers. If I can get here, then they've got pretty good assurance that you're maintaining client ledgers. And two, it will real quickly highlight if any of them are in the negative. You can do a quick scan and see if any of them are in the negative. So Chad, anything on this side that you want to add to the three-way reconciliation?
Yeah, I would like you to show one thing, and I just want to make one point. So this quick reconciliation you did between the bank statement and your TrustBooks records satisfies the quarterly requirement for the three-way reconciliation. So if you're using TrustBooks, technically speaking, you're doing the quarterly requirement every single month as part of your normal routine, right?
Correct. Yep.
And then could you show the digital signing piece? Because I think what's not as intuitive here is that our process is entirely paperless. So there's no need to print this out and then maintain that file. In TrustBooks, that whole paper file we talked about earlier goes away, right?
You're right, yeah. And the state bar comes in to audit you. Look at this. I've got all of my reconciliations right here. And there is that sign and date requirement. I just went to the manage reconciliation page and I can come down here and I can sign off on this. Hit save. Are you sure? Yes. And what it's going to do for me, and this is what we asked and got confirmation from the state bar on, is it puts an auto signature in there where it does a timestamp and you can't undo it. And so now I've got the signature as part of this. If I go back out and look at that three-way reconciliation again, it's going to show here's who reviewed it, Tom Boyle, here's the timestamp, and this is going to meet the state bar's requirement for a sign and date of your reconciliation. And so that gets put on there. You're right, Chad. It is a paperless thing. So, and I've got it for all my months. So you get audited, and it's right here at your fingertips. And you just say, "Yep, Ann from the state bar. Here's what I've got. Happy to show you everything."
Okay, great. Thanks, Tom.
All right. So that's the three-way reconciliation. Now flipping channels over to the quarterly review. So again, kind of in this month-end, quarter-end process, I'm going to go perform quarterly review. And this is something that's unique. We are the only software that allows you to do this paperless quarterly review with software. There's no other software that's got this out there. We're the only ones. This is something that Chad and I and the TrustBooks team we wanted to build this in last fall. We saw our users and just the North Carolina legal market really struggling with getting comfort on this and being able to complete this. So we heard that, we listened, and we went out and we built this as part of the product. And our whole mindset with building this was, how do we take as much weight off of our users as possible when completing the quarterly review? And so you'll notice when you complete this quarterly review, a lot of that extra burden that you've got of creating big paper files and where you find the information, we've taken off the plate of our users. And so I'll walk you through what a reconciliation or quarterly review looks like in TrustBooks. So I'm going to select the quarter. So I'm going to select Q1 2018. And every time I select something, the next field filters. And so what I mean by that is I've selected Q1 2018. When I go to choose a matter, I'm only going to be left with those clients that actually had disbursements during this quarter. So it's not going to give me this massive list of clients that I've got in my trust account. It's going to filter down to only those clients that have activity during this one quarter. And so let's go, I'll go Tom Boyle. And again, next step is it filters. Now I've got choose disbursements. It's only going to show me those disbursements during this quarter for that specific client. So I don't get overwhelmed with, okay, what choice do I have to make now? Everything's being filtered down for me. I've only got one disbursement for this client during the quarter, so I'm going to choose it. And then I keep walking my way down the checklist. So next one is upload check images. I'm going to simply just go find the check image. I'm going to upload it. It's just like uploading or attaching a file to an email. And then there was the question about trust ledgers. How do you look at your trust ledger? Is that something that gets the PDF gets generated for you? So the short answer is yes. I can go and review all these items, and this blue font is a hyperlink. So I can go and click on this January 31st, and it's going to open up and show me the trust ledger for that month. And so I've got my trust ledger, all activity high level for this specific month. I can tie in, I'm looking at we're Tom Boyle, this check number 552122 for $720. Great, I just tied this into my trust ledger for the month of January. I can select it here. I do the same thing on the client ledger. It's going to show me only this specific client ledger. So I pulled that up. I've got the client ledger for Tom Boyle. Now I can trace in that payment for $720. It's on page 2. Here it is, January 2nd, 552122 for $720. Great. I'm going to attach that. And then cancel checks. I just looked at this. I've reviewed it. So I'm going to click off that I've reviewed it. Any disbursements improperly made? Nope. Any disbursements outstanding? No. So that's it. We just reviewed a single transaction. I'm going to repeat this now for the next 2 steps. I'm going to do this pretty quickly just to walk you through same exact process, but I want to kind of make it through and show you what the end product looks like.
Tom, while you're doing this, I think just kind of to recap what we've heard from our users is that the cool thing about this is you don't have to think about what to grab. You just follow the steps. And as you go through each step, it gives you the data you need and just the data you need. And then you just check your way through, right? I mean, that's kind of the benefit here is that you don't have to guess what to find. The program has all the data. Yep,
exactly. So we're guiding you through, you're not circumventing actually doing the review. You're just doing it in a really efficient process. And you're not having to waste the brain power on the what ifs. You know exactly what you're supposed to look at, and we just kind of guide you through that process. So I'm on the last transaction here, transaction number 3. We've got a sign off. Again, this is just like the sign off we did on the reconciliation piece. So this allows us to again, maintain that paperless environment. Last step is to hit finalize quarterly review. Oop. See, that's a good little checkbox. If you accidentally skip one of the things that you're supposed to complete, we give you an error message. So I accidentally did not hit I did not check yes or no on disbursements outstanding. And so it gave us an error message. It wouldn't allow me to save it. So I'm going to now hit finalize quarterly review. So this takes me back out under view quarterly reviews. And again, just like the view reconciliations, I've got all the quarters that I've done. And for the ones that are complete, I can now go and print this. And so this is what Chad was talking about earlier with what exactly do you need to maintain? We've got the complete file for everything that you need to maintain for completing that quarterly review. It's right here, it's paperless. We even put it back into the same template form that the state bar created, just so if you ever get audited, they don't have to overthink it. They know, they're used to their template. And so this final product is gonna look a lot like their template. So I've got transaction number 1, transaction number 2, transaction number 3, signed off. Great, that's our summary. That's kind of documenting everything that we just did in TrustBooks. Now, the important pieces also are that you attach all that supporting document. And what the PDF here has generated is all of that complete file. We've done it paperless, and it's all right here for you. So transaction 1, here's that check image. Transaction number 2, here's the check image. Transaction number 3, again, the check image. So I just got all of our check images. Now I go into our trust ledger. So we're gonna create the trust ledger and put it in this file. There's the trust ledger for February. Here's the trust ledger for March. And then the final piece was client ledgers. So the client ledger for Tom Boyle, client ledger for Amy Johnson, and then the final client ledger for Beth Barker. So that's our complete file. It's there, it's paperless, it's right inside of TrustBooks, and you've got it right at your fingertips.
Hey, Tom, this is great stuff. We've got quite a few questions I'm going to dig into, but before I want to confirm one thing and have you point out 2 things in the product. So to meet these requirements for North Carolina, there's really 2 key points. We need to be doing monthly reconciliations, which you've demoed, and we need to do quarterly reviews, which you've demoed. In TrustBooks, all that is paperless. So if you would just one more time show us, they get the knock at the door, they're getting audited, and the bar says, show me that you've met these requirements. Just show me quickly the 2 places they go and the 2 reports they pull up, because it's really just 2 reports, right? That's all they need, and everything is in the product to present that information.
Sure. So it's this bottom row. This is our kind of month-end row. And under reconciliations, you've got view reconciliations. So here's a history of all the reconciliations we've completed. We've got 2 reconciliation reports, a detailed reconciliation, but the all-important one is this 3-way reconciliation report. These 2 reports generate every time you reconcile. So here they are right at my fingertips. That's the reconciliation side. On the quarterly review side, again, under reconciliations, click view quarterly reviews. And anything with the print button over here is a quarterly review that I've completed. And if the state bar came in, all I'd have to do is print these out and hand them off to Ann, the state auditor.
Okay, sounds good. And then I've got a few other questions. We've had some good ones come in from the team here. We've got some of our users, our TrustBooks users on the webinar, and some non-users. So these are going to kind of be mingled. I'm just going to go through them, okay? Let's see. At the bottom of the 3-way reconciliation report is TrustBooks Reviewer. Who does this and where is that one signed? So I believe what Don is saying is where we implement the team plan. So can you just go back to the reconciliation, the 3-way, and let's just show that line so we can make sure everyone sees it, and then you can explain briefly what our team plan is.
Yeah, so on the 3-way reconciliation, we've got a few different sign-offs. The one ultimately that the state bar cares about is who's going to be the reviewer inside the firm. And so that's this reviewer timestamp. The other 2, say you've got somebody, a bookkeeper inside the firm that you want to have sign off as the reviewer. Just for transparency, for your own internal processes, you've got that ability to do that. The TrustBooks Reviewer, that's for folks in our team plan. We offer a team plan that's kind of a software plus service. And so our users have the ability to manage the day-to-day of their trust account in TrustBooks. And then at month end, one of our trust accounting specialists and a CPA would come in, actually complete the reconciliation and sign off as reviewer of the reconciliation. So it combines kind of this extra layer of trust account oversight from one of our team members to come in at month end and do the reconciliations. And that's in that plan, our team would sign off as the TrustBooks reviewer.
Okay, great. And then a couple other of these, I'm going to read a few of these and batch them together. My TrustBooks does not have a North Carolina quarterly review option. We got a couple of those. Guys, what that is this is a feature we built just for the state of North Carolina. So it's not turned on for our entire end user community. You can turn this on yourself. Tom, will you show us how to do that?
Sure. Yeah. So under miscellaneous, go to manage my account. And under the billing section, you've got the ability to change this to NC DIY or NC monthly or annual. So that's where you would change this to the NC DIY plan, hit update billing, and then you would have that quarterly review feature turned on. Anyone in our team plan automatically gets that feature. So if you're in our team plan, you should automatically have that feature. If you're in our DIY plan, that's something you would turn on through that billing side.
Perfect. Okay. Thank you, Tom. And then we've got a couple extra ones here. So do we just upload an image of the check into TrustBooks, or are we uploading an actual image of the canceled check? Can you just walk us through basically how you're getting the images? We had a few questions around that. How's the best way to get the check image into TrustBooks?
Yeah, so at the end of the day, it's going to be a lot like attaching a file to an email. If you can kind of get your arms around how does it look to attach a file to an email, that's the same process that it's going to look like to get it into TrustBooks. And so to get that image, you've got, I guess, a few different options. You can either go into online banking and select the image, depending on your bank, but select the image and save either a PDF or a JPEG file of that image on your computer. You could take your bank statement, and your bank statement should have the cleared checks images at the end of the bank statement, and you could get the check image from that and scan it and save it on your computer. I guess ultimately what you're trying to do is get a copy of that image on your computer that you can then attach into TrustBooks, just like you would attach a file to an email.
I would say most of my users have found the best results with going into their online banking, and then when you click on View Check Image, you can just right-click on that image and hit Save or Save to Desktop, and then they can import it right there. So that's worked out well. I have two more questions, Tom, I think, and then we're going to close it for everybody. But I also want to make one note. We've got maybe 20 or 30 of our users or so on. Anyone who is questions with this feature or any feature, feel free to reach out to support@trustbooks.com and just let us know. And we're glad to do a one-on-one session like this with you to help you through that feature the first time. Any change is difficult because it's change. So just let us know where we can help you. We're glad to help you get that moving. And then last two questions, Tom, or three questions. I'm going to say them all and then we can answer them. The sign off and finalized review, who signs that? Is it the preparer or the attorney?
So it's going to be the attorney.
The attorney, okay.
Yep. So for the quarterly review, yeah, and just a FYI on the quarterly review, State Bar wants this to be owned in the responsibility of the attorney, not delegated to a non-attorney. The big kind of focus on the quarterly review is fraud and theft and embezzlement, and so there's really this push that it's the responsibility of the attorney, because they want that attorney to be, have direct insight into the transactions chosen, reviewed, and signed off on.
Okay, thank you, Tom. And then I use a checkbook and manually write checks from my trust account. Do I have to change to electronic checks to use TrustBooks? Tom, I'll answer this while you demo a payment real quick. Cheryl, no, you don't. A lot of our users still process checks the same way. They just do the record keeping in TrustBooks. So in here, whenever you create a check, you're going to fill it out like you would a paper check. And on the lower right-hand corner there, it says print check. If you check that, then you have the ability to print to check stock in your printer. If you don't check that, we just record the record keeping. While we're here, interesting to note, this is what the user was asking about earlier. If Tom were to try to spend more than $11,200 towards Amy, we would not allow that because it would make it a negative transaction. Also, down on the memo line, North Carolina requires that you put the client name and a proper purpose or description. We automatically put the client name on that memo line for you, and we don't let you proceed without a proper description. So these are just a few things that we build into the product based on North Carolina requirements to make sure that everything is working like it's supposed to. And then Tom, last question. If I sign up for TrustBooks, will I have the option to print all the documents or only the quarterly review? Manning, that's a great question. Tom, if you'll show our month-end reports.
Sure.
Manning, we've designed a special spot for attorneys that puts everything right at your fingertips. So we've got two spots we'll show you, and we're going to end on this. This is your month-end reports. So we will show you a year view of all these reports for every month, and we've got basically a list of all payments, deposits, and client activity, and then all your reconciliations. So this one little portal was built for attorneys to quickly find what they want. And then if you want something custom, you can go to our dashboard, and we have a custom report builder where you can choose to filter on whatever you want. So right in here, this is where you could say, I want to look for this attorney, this responsible attorney by this date, for this matter, for this balance, and you can view all this information. You can also go here at any time and export out all your information. It's in the cloud securely forever, but you can export your data at any time you own it. And then Marilyn asked a question. This will be our last one. How simple is it to switch from QuickBooks to TrustBooks? Marilyn, that's a difficult one to answer here. I'll give you a basic explanation. It's very easy if your QuickBooks is completely accurate. If you've done your reconciliation, you have client ledgers that exist outside of QuickBooks that are easy to manage, then our onboarding specialist can help you get that information in. If your QuickBooks is not up to date and organized, it can be challenging because we have to go on a scavenger hunt and figure out the pieces that are missing. But probably 30 to 40% of our users come directly from QuickBooks into TrustBooks. So we help people with that all the time. When you sign up for your trial or a demo, just put in the note that you're switching from QuickBooks, and we'll make sure one of the people that calls to do your onboarding call is one of our QuickBooks specialists, and they'll be able to walk through the whole process on the phone. We do that all the time. Okay, so we've run a little over, Tom. Everyone stayed with us until the end, or mostly everybody. Thank you guys so much. I really appreciate you coming in. Any further questions, you can just email support@trustbooks.com, and we'll be sure to get right out to them. And probably, you think, Tom, by the end of the day, we'll send out the slide deck from today?
I think so, yeah.
Yeah, if not, but let's say by close of business tomorrow, because we have some customer calls scheduled after this. By close of business tomorrow, we'll send that out. But thank you, everyone, for spending a little over an hour with us. Tom, do you have anything in closing?
No, we appreciate it. And like Chad said, existing users, prospective users, if you have questions and need some support, we're happy to help. So we want to hear from you, and we want to make sure you've got this, you're comfortable with this, and you're in good shape.
All right, man. Appreciate it, guys. Thank you very much. Have a great day.